So, you want to be a better trader, better investor, make more profits, or just get a better understanding of the financial markets? This is the podcast for you. You are listening to Traders of Money, brought to you by TradeDelicious. Now your host, Jordan Mellor.
Ruben, how are we doing? Welcome to Traders of Money. We've talked about having you on here for a little while. It's finally good to see you and to have a chat to you. How's your day been?
I'm going well. Thank you for the invitation. I'm going to discuss about my background a bit. I know that you are a bit curious about it. And yeah,
I
I'm
am.
going well.
I'm curious. I'm curious about it to find out myself. Never mind everyone else listening. We're just going to share that journey with everyone too. But we've worked together for a little bit now across a number of different projects, and we obviously came across each other through the 5%ers, and we've done a bit of trading. We've done a bit of work together outside of trading as well. And I've always been interested because, if I'm not mistaken, you early in your trading career you were an options trader, correct?
Yeah, that's correct. Just before I joined the Favors, I was an options trader in a prop firm, a traditional prop firm, which teach me a lot of things about trading in general, risk management, and different stuff. So yeah.
Where, okay, let's start from the beginning. Let's go. I know I don't usually dive into people's stories this in depth, but I'm intrigued. Where coming out of did you study at uni and did you move into always interested in finance? Let's discuss the story.
Okay, let's start a story. So originally, I'm from Paris, France. I moved in Tel Aviv 7 years ago, around that. I started my study, make a BA in business and finance. So I had some, theoretical practices. Generally in university, you don't learn how to trade and what is financial market. You know what is the overall things, but you don't know specifically what is it.
Yeah.
And just after I finished my study, I had the chance to join a traditional pro firm here in Tel Aviv as an option trader. So, I had very small basics at the beginning. I was trading a little bit stocks, a little bit forex, a little bit crypto, but not as a professional level. And I had the chance, I passed the interview, and they, I don't know, maybe they found in me a behavior. Generally when a prop firm make the interview for a trader, they like to see what is his mindset and if he like to take risk or not, because generally they won't take someone that is very not taking a risk in life in general, or even in trading. So that's how I joined this prop firm. And what is good in this prop firm is that I was directly thrown into the financial market. So I had no time to learn. We had 1 month of teaching what is options, what is trading, and then we start direct on the live account. So of course we have very small risk exposure at the beginning, and then it increases step by step after we understand the market.
During your time in uni, did you move from Paris to Tel Aviv for other purposes other than study? Was that just a life move for you?
It was both. I think I had the chance to have some family here. And then the second thing is that I wanted to learn also there in Tel Aviv, which there was a lot of good university. So I had the chance, and I changed my path. I already started before I moved to Tel Aviv a degree in business in Paris, and then I stopped in the middle and moved directly to continue in Tel Aviv. Actually,
was trading always on your radar? Was it something you come across later in your stages of university? Was it something that you've known about since you were like? How did the trading tick the box in your mind? When did you start to be exposed to this?
Finance is a very big subject, and there is, different type of finance. You have capital market, but you have also the other part, which is company valuation and VC, and And also in here, there is a lot of startups in Tel Aviv, so it can be also a big part of the finance. But I remember when I was kid, I always wanted to be like a trader. I like numbers, I like data, like analysis. And then I moved to university and I completely forget about it. I say, okay, maybe I can do marketing, maybe I can do entrepreneurship, I can do a lot of things. And then by chance, again, I, send my CV a lot in a lot of different places, and I had the chance to get a couple of answers, and one of them was this prop firm, which teach me a lot of things in markets directly. Yeah.
Fantastic. So you were thrown straight into the deep end. Went straight into proprietary trading. There wasn't much retail trading going on prior to this.
So of course, when you start trading as an option trader, you don't know what is options. Okay, you don't know what is
Yeah.
call, you don't know what is put, and then you need to learn what is all about. And of course, when you trade options, generally you don't trade the direction of the price. You trade the volatility of the assets specifically. So
Mm-hmm.
there is a lot of difficult to enter into deeper details in very few minutes, but there is something that called Greeks exposure. So you need to manage the overall portfolio and know what is the delta of your position, the vega, the gamma, and then you have all of this together. So we had like 1 month to practice and to understand and learn the basics, and only after, the only way to learn how the market moves and behave is to trade it with, of course, minimal risk at the beginning. They won't give you a lot of risk at the beginning, and
Mm-hmm.
then you start to learn, and if you start to understand and find some pattern in the market that come back, and generally in options that's coming back a lot, you can increase your risk. So that's how it started.
So was it love at first sight? Did you fall in love with trading, or was it a bit of a battle at first?
Yeah, this was for me, I think, a life changer, game changer for me, because I traded commodities, which is also something that fascinating me. And in commodities, I was trading oil, which is, when you trade oil and when you're an oil trader, Mark Rich, and if you know all of
Mm-hmm.
oil have an history. The price of oil is driving probably, and we see this today also, the overall market. Okay, we had an
Mm-hmm.
energy crisis a few months ago between Russia and Ukraine, and when I was trading oil, it was the there was the COVID, and there was the a battle price between Russia and Saudi Arabia. We had 25% drop in 1 week. So oil is let's say a gold asset to trade when you want to start trading. It's difficult, it's risky, but you directly move into this, and you need to understand what the world is doing. You need to understand geopolitical, you need to understand data, you need to understand a lot
Mm-hmm.
of things.
It's funny you say that because my first ever trade was on oil. Like first ever, I've got it framed up on the wall. I made $1.01, and that was
Yeah.
my first ever trade, CFDs in oil. But it's interesting that you still trade oil heavily today?
Actually not. I'm not trading oil today, but I'm still looking at the price every time.
Mm.
When you want to trade options on hold, you need to have a lot of margin, and today I'm working at the fivers, so I don't have the time to manage this. But I'm still looking at the price and the news that there is on oil, and because it's definitely driving the other markets. So yes, I'm looking, but I'm not trading.
Fantastic. We'll dive into your position at the Fivers in a little bit because I do want to dive into that, and you'll know from previous conversations we've had, it interests me as well. In I think it's just traders are addicted to data and getting all of that stuff. So we'll dive into what your role is there and how you help the firm in that manner. But let's concentrate on your trading in specific at the moment. Your options trading at the firm, were you successful over the time at this firm?
That's a good question. When you're a junior trader, so you cannot be profitable at the beginning, and that's why
Mm-hmm.
they give you a small risk, because you need to
Yep.
understand and learn the market. So at the beginning, it was ups and down. You don't understand what you do, and then step by step, you had some good results, and then my risk increased. And then, I didn't have the chance to continue over 5 or 6 years doing the same thing.
Yeah.
I trade oil, and then I stopped and moved to sugar, which is another commodity, because there was a lot of volatility in oil, especially because of the COVID and because of Russia. I didn't want to cut the price. There was a lot of story there, and yeah. So at the end, I was starting to be profitable. It was the beginning where I feel like, okay, I'm starting to get something. So yeah, I was profitable at probably at the end of when the fund just closed here in Tel Aviv. But they
Mhm.
have a lot of fund in India and in London. I think they have in Canada also. Um,
Fantastic.
so yeah.
So what it's going to be tough because obviously you learned to trade through these guys, but are you able to share maybe some of the pivotal moments in your trading the firm where they've potentially told you something or you've learned something that retail traders wouldn't have learned themselves, that had been passed down from experts that really curved your trading? Was there any standout events or advice or anything you received that really was drilled into you from early stages that retail traders teaching themselves might find as valuable?
Yeah, definitely. You need to understand that when you're a retail trader, you have no impact in the market. And when I was trading, at the fund, we had an analyst that works for us, and every day, every morning, send us, a global market overview to understand. And if you know CFTC, for example, which is
Mhm.
the exposure that big funds and big banks and even physical position, because in commodity you have some people that hold physical oil or physical gold,
Mhm.
and it's helped me a lot to understand the overall context to position myself. And this type of data today is available for any retail trader. So retail traders should take in consideration that is a very small into the market. There will be bigger ones, and you need to go with them. And to understand that, it takes a lot of time, because it's easy to say, but very
Yeah.
difficult to understand how to position yourself. And after time after time, you understand what's the timing to go in with these big whales that keep driving the
Mhm.
market today. So that's my main advice.
What drove you, obviously, other than the firm closing down, which you mentioned there, what drove you to move towards, obviously, Fivers are very prominent in CFD trading, right? Trading FX currencies and indices. Was that a big switch for you, no longer looking at, implied volatility and now looking at actual assets to pair against each other?
I will explain one story which can be very interesting. But I remember one day in March 2020, a weekend where there was still a price battle between Russia and Saudi Arabia. Saudi
Hmm.
Arabia wanted to cut the production to keep the price
Hmm.
high because it was the corona, and Russia did not want. Okay, they say, okay, we don't care, we want to keep producing. So there was like a lack of equilibrium in the market, and during that weekend, the market dropped 25%. Okay, so when oil dropped 25% in a week, let's say in the weekend, so you cannot manage your position. The market opened with a 25% gap down. I don't know if I remember, the market closed at $42 per barrel and opened at 30, something like that. This was, a big night because we get call and we say, okay, if you had position, you need to manage it. A lot of liquidity, a lot of volume. We could not close the position. Um, so they teach me how to trade and how to be aware and sometimes awake. When you need to manage your position, you need to be very calm, not nervous, because at some point you only need to manage and to wait. And this teach me a lot of things. On my side, I didn't have any position this weekend, so I was quite okay. But I see all other traders that quite that was very nervous. I came at the office a
Mm.
bit late because I didn't have any position. But I see some traders that was there at 1 a.m. in the morning, and at 12 they were still here to keep closing and trying to find a way out to exit or to take profit or to cut the losses or whatever. But in options, when the market dropped 25% and you are trying to manage the delta, okay, it's quite very difficult. Talking about forex and what I do every day here, in options, what I did generally is I didn't trade the direction of the price. Again, this is something that in trading, when you go to forex and when you go to US indices and stocks, whatever, and especially in the fivers, we don't offer options for many reasons, but you want to trade the direction of the price. Today, the Euro USD will push from 1.05 to 1.06. I will buy. Okay, in option trading, there is different strategy, a lot of different stuff. At some point, you don't care about the direction of the price. You say, okay, I believe that there will be volatility. I believe that the implied volatility, like you said, will increase. I will build my strategy. I will be delta 0. Delta, which means I don't care which is the direction of the price. My delta will be 0. And if the price move, I will have to manage the overall position. So all the time, this type of mindset, of being, delta neutral, which means that you don't care what is the direction of the price. Teach me or learn me a theory that I keep having in forex, for example, to trade the direction. When I use Bollinger Bands, I'm still using Bollinger Bands in forex because I want to know what is the volatility at each moment of time, which is still very important for me because I was an option trader before. So I keep trading a lot of stuff from there. Even I'm trading direction.
So you have been able to extract a lot of the tools and a lot of the skills from options and implement it into FX trading. Do you dabble? Obviously, you don't trade oil very often. You did trade sugar for a while. Do you still dabble in commodities, or are you strictly FX trading?
I'm still looking at commodities, especially gold this time. I think it's a good time to trade gold. It was difficult to manage it because price of gold dropped down. Even generally, when there is risk on and risk off environment, the gold tends to grow and to increase, and the S&P tends to go down. It's sometimes a hedge for investors, and recently we see a gold dropping down below 1,700. So it was difficult to trade gold on the long term, but yeah, I'm still looking at gold. Sugar is not so volatile on directional. I keep preferring to trade it on options. But yeah, I'm keep looking at commodity, and I can take sometimes some position. I'm not trading it on a daily basis, but I can have sometimes an idea and open a trade on my specific account and personal account. That's totally fine.
Fantastic. So obviously, a lot of the tools you could bring over from options trading, I've had the privilege of being able to watch some of your live trading rooms that you do at the Fivers. And how long did it take you to really adapt to more technical analysis, looking at buying power, looking at valuations? Because when you start obviously trying to choose a direction on an asset compared to choosing when it's going to be more volatile, they're two different things. How did you find that transition? Was it a tough one? Was it a smooth? What really helped you make that transition?
It's very interesting question, because when I was trading options, at some point the fund and the direct orders and the other traders, which was more experienced than me, didn't teach me how to trade the direction. I only look at the skew of the options and what is the historical volatility in opposite to the implied, and how I should manage the trade and how I should manage the options, or I should hedge myself with the delta. It's called dynamic hedging. It's another subject, but it and when I come to forex and especially to the fivers, I say, I need no, it's more directional, and I need to understand what is the direction. So, I can make this transition. This takes me quite a lot of time. I don't know if it's a lot of time, but it's quite, between 6 months and 1 year to understand how I can take the overall tools that I have in options and bring it to directional. The main conclusion that I can have and I can say is something specific to data and numbers. Okay, when you generally you say, at some point you need to understand before I was saying, okay, here I will expect a high volatility. And in trading, I'm generally I should expect a high movement in the price. Generally,
Mhm.
both things are combined. And when there is a high volatility movement in one side, for example, I expect the market to, I don't know, calm down a little bit or reducing volatility. So I'm using all the time the volatility concept into the direction of the price. Again, it's difficult to not explaining it on a graph or
Yeah.
deeping it into details. But I believe that for most of people that keep watching my trading room or other, they have a little understanding of what I'm looking
Mhm.
for on the market.
Yeah, I've found from the live trading room we did together as well that we trade remarkably similar,
Yeah,
not necessarily in setups and positions, but in concept,
yeah.
in the way we analyze the market. The looking at volatility all the time, learning the trade based on volatility, based on volume data, moving that into an asset which is less reliable when it comes down to volume. Because I mean, when we're trading CFDs, it's all tick volumes, etc. Do you feel like some of the stuff you learned may have hindered your progress in another market? Do you feel sometimes worrying about volatility or thinking along those things can sometimes drag you away from what CFDs are telling you based on your previous experience? Am I making sense in what I'm asking here?
So you're asking me if volatility at some point can be
So
putting
the
me
things
away?
you've learned, in
Okay.
options, have
Yeah.
you found that some of the things you have learned have stopped you from being able to make money in this other market, like kind of holding you back rather than pushing you forward? Is there any assets in there
Um,
or parts of your learning journey which have held you back?
uh, this was a switch because anyway, like what can I say? Um, I was trading something very specific, which is
Yeah.
options and which is commodity and which is oil, which is the energy market. So it was a specific niche into the financial market,
Hmm.
which is way bigger. Okay, so when you want to dive and to dig into another specific asset, which is forex, and trade it, because when I was trading oil or sugar, I was looking at forex market. I did not trade
Hmm.
it, but I know that there was a correlation. For example, for the sugar, there is a correlation between the real Brazilian, the Brazilian currency, and sugar,
Hmm.
because in Brazil we have it's the
Big
main
exporter.
big
Yeah.
exporter and suppliers of sugar.
Hmm.
So all the time I had to look at forex, but I did not trade the forex. Um, so because I was trading something specific, I had to enlarge my understanding of this specific market and to bring it into something different. Forex behave way more differently than oil, and the US indices is behaving differently than Forex, and stocks is behaving differently than indices. So all the time you need
Hmm.
to adapt yourself in the market because it will be different. But trading options teach me all the time to look at the volatility. So any market will have a different volatility, and when you understand the concept and what volatility the market brings to you, okay, you can take an edge from it and you can take an advantage.
Okay.
I answer the question, or
Yeah, you
yeah,
did. You
okay.
did. Yeah. Sorry, I didn't word that very well. I
Yeah,
have
that's
a
fine.
question in my head that I'm trying to get out. But okay, so let's awesome. You've done your training. You've made the transition. You've arrived at the 5%ers. Now I know now you are leading the risk management department at the Fivers. What is the risk management department at the Fivers? What is it that you do? What is it that your day consists of?
So there is a lot of things. First of all, is to monitor that the programs that we offer to traders is on a good equilibrium.
Hmm.
We cannot we are still a fund. We need to understand that when you enter the Fivers or maybe other firms that specifically on the Fivers, we are looking for traders that can manage a part of the portfolio. Okay, and when
Yeah.
you want to trade a part of the portfolio, you need to have some capability um, in risk to understand the risk when you trade, to be part of the big pool that we have here. So the main actually job, it's not the only one, but the main job is to look at people and traders that pass, to understand what is their strategy, or we can implement them into the pool, how much we can allocate. Um, there are some traders that we need to be um, more cautious, because they are using EA, and we need to be they are trading differently. So we have different groups of traders that pass. But yeah, the main objective is to check that the program is well equilibrium. I mean, the rules that we give in the program should be very calculated. I don't know how to
Yeah.
explain, but we
Yeah.
need to calculate very accurately what the profit target and what the drawdown, and why there is this rule and why there is not this rule, and so on. What is the leverage, and why we grow up the account by 4 in instant funding, for example. Why you should put a stop loss. So everything is monitored, and there is a reason behind it in order to manage the overall pool when you pass into a live account.
Yeah, it's interesting because I think, especially with the competitors in the market in which you're based in, there's a lot of skepticism about what's a real fund and what's just demo trading for the evaluation accounts, right? There's that medium balance, and I don't think anywhere out there you can get that insight into the risk management department at the 5%ers. Obviously, you guys are managing the large portfolio, and you need to monitor risk. You need to monitor risk exposure. And these programs are well thought out, not necessarily to prevent people from passing or to make it harder, just solely for the purpose of not losing money. You're here to fund people, but at the end of the day, you need to manage that risk, and you're here to hedge it and move forward.
Mhm.
Is there any kind of patterns you see in certain traders, or little insights in which would help outside traders in being more successful at a firm, in being more successful in evaluation accounts and getting funded?
There is a tendency recently that people want to pass the challenge very fast. Okay, it's good to be very motivated and to pass, but it can be harmful, because you can enter in a cycle when you say, yeah, I didn't pass, I will go again and go again, and then you don't let your strategy take the time to pass actually the evaluation. Again, the main, I believe, and I keep looking it every day, the traders that keep passing levels and after levels, and keep withdrawing on a consistently manner every month or every 15 days. They are traders that take their time. They are not changing their strategy. Of course, they are adapting according to the market, but they are using the same risk. They are using the same market, because this is the market. This is a pair that they actually master. They have a back test behind, and they actually pass the account consistently from evaluation to the first level account and the second funded level account, and so on. So you need to take your time, and this is why in the instant funding, for example, we give 6 months to pass. In other profit, for example, you get only 2 months or 1 month. I don't know, but even a hedge fund don't make 10% per month. So it can pass, okay, by chance, because sometimes the market can give you some space to make your trade, but in the long term, at the end, it will not work.
So
So
you're finding the guys who are getting further in the firm, getting more funded and withdrawing consistently, are consistent in their process, regardless of outcome. Even when they go through drawdowns, they're consistent in the way that they trade, the risk that they're taking, and their whole process in trading.
yeah, so those people are still having losing days, because that's part
Hmm.
of the game, that's part of trading.
Yeah,
But
we're risk on traders.
when you get the bigger picture and the big picture of all the overall journey that they had with us, let's say that I keep using the word volatility, but the equity volatility of their account is lower, which means they cannot move 3% on PNL on one day. Okay, they will move like steadily, increasing their PNL. Um, So when you have someone that have a high volatility in equity, you know that at some point he's not managing so well the risk because he will touch the drawdown or the target, one of them, but he's taking more risk, and at some point he can blow the account. In opposite to someone that keep having smaller risk, still have drawdown, but on a very safe side, and keep growing steadily because his strategy is working.
Do you have the opportunity to create relationships with some of the higher net worth traders at the firm? Like, are you, being the risk management department, are you in touch with these guys? Are you communicating? What type of communication are you undergoing? Is it just general, hi, I'm head of risk management, or are you really diving into trading, being like, hey, suggest doing this potentially, or vice versa? They come back to you. What's the relationship like as you start to gain a higher net worth in these firms?
Yeah, that's a very good question. But of course, I have not a lot, but few very successful traders that I'm keep communicating with them. It can be, any. Sometimes we will give like some specific rules for these traders. I'm not talking about the first or second or third levels, but I'm talking to higher levels with
Yeah.
traders that are managing, a high account.
Hmm.
um, at some point we can give them some specific rules to adapt their trading to the pool in general. So, and at some point it's good also for the trader to have someone that he can talk to this person, to not feeling alone. So that's why also I'm here when he needs some help, when he want to share an idea on the market, on whatever it is. That's also part of my job, to keep traders that are successful to still be successful.
Hmm.
This is part of my job to keep them healthy into the fund also. Yeah.
Fantastic. It's such good insight. You don't get this type of stuff, anywhere when looking out there. So it's good insight to see how you manage it, and how the firm goes about it, and then the relationships you build, and the fact that it is a partnership. The industry is built
Definitely.
up on this idea that it's customer and supplier. It's not. It is a partnership, and you are going together to achieve profit. That's why we're all here, and it's just
Yeah.
interesting to hear that.
Yeah, at the end of the day, we have a total P&L, so we should be careful that keeping it this P&L, higher as possible, and trying to avoid a lot of drawdown when there are news. So we have our hedge also here, but again, we need to keep traders that are successful into the game with us as long as possible.
Hmm. Let's have some fun. Let's have some fun. Is there been, whether it's you, whether it's someone at the firm, no names need to be mentioned, has there
Okay.
been any funny events? And when I say funny events, I mean ridiculously risky events that have gone down, that have potentially blown accounts, or yourself lost a lot of money, big, kind of oops moments? Is does anything ring loudly in your mind when I mention that?
Um,
Can be in your personal trading as well. Was there ever a time that you've, you know, done a
Uh,
whoops,
that's a good
had a bad
question.
trade, or?
Yeah, we have someone here that try to pass the evaluation, go to PM, and then he's on the office. Okay, you probably
Mhm,
know with it, but um, he wants to have the same journey as a trader can have. So
mhm,
he's making the evaluation, and he passed several times to PM. And then when you pass to PM, you have a higher account. You can withdraw money, and so on. um, and it's I see him, but he's trading differently than what he did in the evaluation. He traded the evaluation complete very good, high risk reward, and he managed the risk very well. And then suddenly passed to PM, he's starting good, and then suddenly something happened in his mind, and he's next to me and say, hey, so I try to help him, say,
mhm,
okay, I'm here for you. I will give you specific rules that are not in the programs. Okay, I will give you specific rules that you need that you need to respect. Okay,
Mm-hmm.
if you go, I don't know, it's something very psychological, but if someone tell you that it's quite above you and tell you, okay, if I go above it, I can get fired. You will not get fired because it's part of the evaluation, but
Yeah.
if it happens, Ruben will slap me. It
Yeah.
can happen,
Yeah.
and I tell him, to respect specific rules. If he want to do it, he accept, and it's part of the game. So that's quite the same story I have with higher traders. That
Mm.
trading high accounts, and I'm analyzing their account and see how I can try to save them, or to help them to manage their account better, and I give them specific rules which actually works. So um,
It's
it's
interesting.
always better to have someone else that that someone is looking at you, and that you cannot do stupid things. And this I learned actually when I was an option trader, because I could not do what I do. I cannot do what I wanted to do all the time.
Mm-hmm.
I had someone that told me, yeah, when you lose 5K a day, you need to close a position, no matter where it is, no matter where you are, no matter what is the position, and if you're in the what direction, you need to close everything. So
Yeah.
that's part of the rule, and there is other rules, and not to enter during the news. Be careful that you have enough liquidity in the market to enter. So this type of specific rules that I get and I had to expect because there was someone above me.
Yeah.
Okay,
There
I'm
was
I'm
there was
behaving this way.
repercussions if you didn't follow them. There was punishment essentially if you didn't follow these.
Yeah, not punishment. There is money on the table, but
Mm.
of course, if they want to avoid you making big mistakes, because we know it can be very fast. If they told you to close at 5K, for example, it's because there is a reason. We don't want to trader that, say, and entering into this loop and say, 5K, that's okay, 10K, 20K, 30K. And then, the market goes against you. And then the problem is much bigger. Um,
Mm-hmm.
so when you start trading with the favors, you have rules that everyone have. But when you continue and pass consistently, we want to continuing
Alter. Yeah.
help them. So
Yeah.
that's why.
Fantastic. Look, Ruben, it has been an absolute pleasure to have you on and share your story and share your insights. I think people are going to see more of you because I'm going to be cheeky and get you on a couple more trading live streams, and we'll do a bit more content together. But I really appreciate your time, and I really appreciate you sharing all of your knowledge with myself and everyone at home.
Definitely, I definitely like, always good to talk and discuss with you. I hope that you have a little bit more background about me, and it's definitely uh, s- um, switch me, or I don't know, drive me from the person that my English, but it drive me today.
Yeah.
Um,
Nah, fantastic. Look, you have a fantastic day, and we'll see you soon.
yeah, definitely. We see you soon. Thank you, Jordan.
Perfect.
Stay in
Bye.
touch.
You've been listening to Traders of Money, the podcast that helps you better understand the financial markets, become a better trader, better investor, and be more profitable. Traders of Money is brought to you by TradeDelicious. Join your host, Jordan Mellor, next time on Traders of Money.